Hello traders, Doc here. In this video I will explain how to find and take simple buy trades. If you watch this video until the end, you will see what all these trades have in common. This is US dollar Japanese yen. On this example we can see this move down, up and down again. And we can see this low here, then price form this higher low and then lower low again. This means that price is consolidating and that we should wait for a better structure to occur so we can take a nice trade. But if you look closely, we can see that price formed this resistance zone here. As you can see, price rejected from this zone here, then second time here and then third time here. That means that this is a valid resistance zone, but price then went up to break this resistance zone here. And what usually happens when price breaks resistance or support zone, retest occurs. As you can see, price then went down to test this previous resistance zone and formed this nice bullish candlestick pattern. Also, for a confirmation, we can see the stochastic RSI indicator is below zero, which indicates bullish pressure. This is a very good opportunity to buy after this candlestick formation and put a stop loss below this previous resistance or low level here. And you can aim for this previous high, but because we have a break and retest, then we can expect a higher high formation, so you can put a take profit above this previous high. This would give us a great risk reward ratio 2.3, and as you can see, price then continued to go up and form this another very strong bullish move. If we continue to analyze this structure here, we can see that price formed this high here, as I mentioned before, but then price broke it with this massive bullish candlestick. But what happened next? We can also see a pullback and retest of this previous high. It's easier to mark it as a zone and it's easier to see it if you use zones. As you can see, we have this nice bullish engulfing candlestick formation, and also we have these low showings of stochastic RSI. So basically we have the same situation as we had here, so we can easily say that this place is also a good opportunity to buy. So you can buy after this candlestick formation, put a stop loss below this previous low or this previous wicks here, and you can aim for this high. But if you want a better risk reward, which I strongly recommend, you can put it higher, and also we expect price to break this high and form a new higher high, just like it happened here. As you can see, this is another very good opportunity to buy. But this time we had an even stronger buy signal. And the reason why is because here we can connect these higher lows and we can see this confluence between this bullish trend line and this previous high. So price went back to retest both this high and this bullish trend line, and as a reaction formed this bullish engulfing candlestick pattern. Plus we had these slow showings of stochastic RSI indicator. So all these reasons combined represent very good opportunity to buy. Now let's review these trades. First we have this broken resistance zone, then price went back to retest it, formed a bullish reaction, and we have an indicator buy signal. Stop loss below previous low and take profit above this previous high, or as I said, you can aim for this previous high. Then we have new higher high formation and price formed this bearish move to retest this previous high, this one. We also have indicator buy signal, plus we have this bullish trend line that connects these previous higher lows. As a reaction we have this bullish engulfing candlestick pattern, and as you can see, price moved up. Here we can see euro dollar trade. It is a very simple trade that perfectly explains how to follow a trend. We can see here that price formed this resistance zone. Price confirmed this zone 4 times, as you can see here, 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 and then here again. But then bullish pressure occurred and price broke this previous resistance. If you look closely, we can see that price formed this double bottom chart pattern. This is a first bottom and this is a second bottom. If you follow me for some time, you know that I like to trade this pattern. It is a very simple pattern but very useful, where price formed this first bottom, then goes up, then it goes down to form second bottom, and then price usually goes up after it breaks this neckline zone here. So this is a first bottom, this is a second bottom, and this is a neckline. That is exactly what happened here, and this time this second bottom was basically a strong bullish engulfing candlestick pattern. This happens sometimes. It is a very good signal to buy because we have this double bottom, and second bottom is also a bullish engulfing candlestick pattern. In this case we also have these low showings of our stochastic RSI indicator, which is another confirmation that we should look for an opportunity to buy. As you can see, price then formed this strong bullish move, so this was a very good opportunity to catch the trend and enter after this formation here. Put a stop loss below this candlestick low and aim for a reasonable risk reward, in this case around 2.4. If we continue to analyze this price behavior here, we can see that price then formed a bearish move or a pullback to retest this previous high. Or basically we can say that price retest this previous resistance zone, because we can see that price failed to break it here, here, and then here again. Price formed this pullback and then retested this previous resistance, and also as another confirmation we have this low indicator showings, which is another buy signal. In this case we can see that we can connect these previous higher lows here, here, and then finally here. So this is a third touch of our trend line, which gives us another reason to look to buy. You can always scale on a lower time frames, in this case 15 minutes, because right now we are on 1 hour time frame. And here we can look for our entry point. Here basically we have this minor consolidation zone and price then broke it and from this multiple bullish wick rejections. And also here we have these low showings of our indicator. So basically even if you looked on a lower time frame, you could find a very good reasons to buy here or maybe here. Next we put our stop loss below this previous low and this trend line, and we can aim for this previous high or put it above it because we have uptrend here and we expect price to break this previous high, and also to find some good risk reward ratio, in this case 2.4. Now if we go back on a higher time frame, we can see that price broke this previous high and formed a new higher high here. So what is the next thing that we can expect to happen? Well, because this is uptrend, we can expect price to form a pullback, new higher low and then move up. And that is exactly what happened again. Price retested its previous high here, and again we have these low showings of our indicator. Here we can see this massive bullish move. This move happened during London and New York overlap, and probably some major news were announced, and this strong bullish move was a reaction to it. So it's hard here to find a good entry reason, but if we go back on a 15 minutes time frame, maybe we can find something there. And on a lower time frame, we also have this low stochastic RSI indicator showings. So here it is not easy to find a good opportunity. Of course, right now for me it's easy to say that this bullish engulfing candlestick pattern represented a good entry level, but in a real-time trading it is very hard to find perfect entry. But basically wherever you decided to enter here and to put a stop loss below this previous low zone, and take profit basically wherever you wanted, it would have been a good decision, as long as your stop loss is below this previous high zone. So basically we can say that every level here was a good opportunity, as long as you used good stop loss placement. And this is how this trade would look on a 1 hour time frame. This time I want to show you a buy trade in this consolidation zone. We cannot say that this is a bullish or bearish structure with these moves down, up, down, up, down, up, down, and it is very hard to catch a trade here, but sometimes in a consolidation areas you can find a good reasons to buy or sell. This time we can see that price formed this minor support zone because it failed to break this zone here, here and then finally here. So this is a third touch and a confirmation of this support zone, and we have this bullish engulfing candlestick pattern followed with this bullish wick rejection here. Again we have these low indicator showings, but because this is a consolidation, we need to scale down on a lower time frame and find good reasons there too. Now this is a 15 minutes time frame and we can clearly see that price formed these lower highs. We are not able to see this lower low and lower high structure on a 1 hour time frame, but we are able to see it on a 15 minute. This is a support zone on a 1 hour time frame and we can see this bullish reaction here. And again we have these low indicator showings. Price then formed these multiple bullish wick rejections and finally broke our bearish trend line, but more importantly it broke this previous high. Price then went back to retest this previous high. So here we have a good opportunity to buy once price broke this bullish trend line and formed this strong bullish candlestick pattern. Or we can enter here after price retested this previous high. Then what we can do is put a stop loss below previous support zone and to aim for the previous high, or in this case here we can put a stop loss below this previous candlestick lows and again aim for this previous high. So this is how this trade would look on a 1 hour time frame. If you decided to enter after this trendline breakout, the good place to place a stop loss is below this support zone and to put a take profit at this previous high level. At previous examples, I said that we can put a take profit above previous high because it is an uptrend and we can expect price to break these highs, but this time we have a consolidation and we don't know if price will react to this high or will it break it. And that is why we don't want to put take profit above this previous high, because in a consolidation zone price can just confirm it and go down. This time it went up, but it doesn't matter. What matters is our analysis and our reasons to buy and also placement of our stop loss and take profit levels. Now let's review all these trades and see how simple they are. First we can see US dollar Japanese yen trade. We had a resistance formation here, then price broke this resistance, it formed a new higher high and then formed a pullback to retest this previous resistance. It retested it with a massive bullish candlestick pattern, and if you remembered, we also have low showings of our stochastic RSI indicator. Price then continued to go up, it broke this previous high, it formed a new one and also went back to form a new higher low to retest this previous high and also confirm our trend line. It confirmed it with a bullish engulfing candlestick pattern, and of course we had low showings of our indicator. Basically we had a break, retest, bullish reaction and indicator confirmation. On euro dollar trade we had uptrend, price formed double bottom chart pattern and second bottom was actually bullish engulfing candlestick pattern. Price then continued to go up, it broke and retested previous resistance level, formed a bullish candlesticks as a reaction, and also we had a low showings of our indicator. Price then continued to go up, it broke previous high, it formed a new high, it formed new higher low, it retested previous high, and if you remember we scaled down on a lower time frame, 15 minutes, and basically we could enter anywhere we wanted as long as our stop loss placement was below previous resistance level. This time we had low indicator showings on both 1 hour and 15 minutes time frame. On New Zealand US dollar we had a consolidation on 1 hour time frame. Price confirmed the support zone with a bullish engulfing candlestick pattern, but because this is a consolidation we need additional reason to buy, and we found it on a lower time frame, 15 minute. On this time frame we can see lower highs and lower lows formation. Price then formed multiple bullish wick rejections followed with a massive bullish candlestick. It broke our trend line and continued to go up and retest this previous high here. It retested it with a bullish engulfing candlestick pattern followed with a massive bullish candlestick. And also on a 1 hour time frame we had low indicator showings. All these trades have few things in common. I found multiple reasons to enter these trades and not just a single one. The reasons are retest of previous key level, trendline confirmation, bullish candlestick pattern, and the low indicator showings. So when you combine all these tools you have good reason to enter a trade. So basically you can open these simple trades by finding a confluence between multiple reasons to enter. I hope this video is helpful to you, and if it is, please like and subscribe so I can continue to make more. Thank you very much and see you in the next video. Bye bye.